Welcome, everybody. It is right at the top of the hour. It is good to have you here with us today. This program, really, I've got my PPP funds. Now what? This is one of those that's really interesting as we start digging into this a little bit from this aspect as we look at it. Number one, a couple of weeks ago, as we were starting to get rolling with the PPP program and some of the stuff that's going on there, one of the things that I ran into was, I kind of was stumbling through a couple of these items as a company myself. And so what I decided to do is, if I'm having questions, there's a lot of you guys that are having questions. And so I thought I'd go ahead and put together a quick webinar on that process, just to kind of explain some of the stuff that I had learned. Sent out a quick email and had 250 people respond, and our account could only handle 100 participants at that point. So for some of you, again, if you didn't make it into that one, we apologize. We ran a couple of them. We had over 300 people in 3 days that we ran through that one. Now that we've got the loan forgiveness application out, I sent a single email, and we've got right around 500 people who are in this webinar today, as well as we're streaming on our Facebook page. And so we've got people attending it there. So again, it's just it's surprising to us, and again, we appreciate that trust that you put in us and as far as getting some of this information to you. We got a lot of information that we're going to cover today, and so we're going to jump kind of right into it a little bit. Again, the reason I'm doing this, first two items on here, first one, there's a boatload of confusion around this whole PPP issue. That piece of the puzzle, again, the program again came out so quick. And now that they're starting to clarify a couple of things, there's items of clarification that we found as of yesterday. And so we'll pass on what we have to you at this point in time. The one thing that is absolutely certain is this will continue to change. There will be more clarification coming out, more points that will still come out. And so again, as we have those, we'll give you some resources to update some of that information as well. Next item, things are starting to open back up a little bit. I know that some of you, literally when this thing hit, you basically decided to close your door and kind of shut things down and wait for things to pass a little bit. Others, you're kind of struggling through a little bit, and yet others, you're growing. Right. And it's interesting in looking at some of the registrations for some of the people who are attending this thing. We've got anywhere from, quite honestly, the trades to restaurants to, there's a number of different people who are in here. And so for some of you, again, if you were in that position where you were directly impacted, where you had to flat out shut down, I feel for you. That's tough. And so that's one of the reasons why we want to offer this a little bit. Now, one of the things that is absolutely certain is business will absolutely be different from this point forward. I don't care what business you're in, it will be different. Right? Even from our perspective, we spend so much time here in the studio doing these live sessions that, again, it's critical. It's going to be different. So again, if you're thinking that, well, I'm just waiting for things to open back up and I can jump back in, that's not going to happen, right? It's not going to go back to normal. And so, let me rephrase that. I hate that phrase. I hate that term, right? It's not going to go back to what it used to be. Right? You hear this new, buzzword of the new normal. You know what? It's going to be different than what it was before. And so it will be different from this point moving forward. Now, there's no question that if you do things properly now, you can come out of this even stronger than you were before. Now, part of that means that you do need to be taking some action now. One of the things that we just did is Patrick from our team just did a program, and I'll give you a link to it, basically leading after this COVID-19 crisis, because again, it's going to be different. What are things that you should be doing now to basically set yourself up for success as you continue to manage through it and come out the other side? Again, some of this government stuff is overwhelming. I've been, pouring through documents like this, and let me tell you, some of the information I'll give you, this particular one, I found some information on page 21,749 of this federal document. And so again, talk about mind-blowing, right? If you want to put yourself to sleep, this will do it really quickly. And so we're trying to bring a little bit more clarity to some of this loan forgiveness piece of the puzzle. Again, we've got some of the guidelines, we've got some clarification. There will be more coming out as we move forward. Now, again, I've got to put my disclaimer in here. Again, what am I not? I am not a banker. I am not a lawyer. I'm not an accountant. I'm not a CPA. I'm not a government employee, right? So why am I doing this? Again, just like last time, I'm a business owner just like you with the same concerns, the same problems, and I want to basically share some of the stuff that I've learned going through this. So I've literally spent this entire week, right, since last Friday, doing nothing but immersing myself in this piece of the puzzle and talking to some of the contacts that I've got, some of the experts that do fall into these categories about interpretation on various items. And so that's what I want to share as we go through this. So with that, let's just dig right in. Again, if you don't know me, my name is Bill Kinnard. I'm the president, CEO of Grandy and Associates. We've been living and breathing this exact stuff, right? So we've been in the trades industry for 35 years, been a business owner here for 15 years. And so, again, it's something that I'm dealing with every day, just like you. So there's the first thing is I want to do is I want to clarify one point that has come up. It's been in the news as of late, so I just want to clarify it a little bit. In fact, I heard something on the news last night about this. Is originally when you filed for your payroll protection, right, there was a line on there, right? So there's a whole bunch of check boxes, right, on the first page that you filled out. And again, it's basically a 2-page application. Second page had a number of items that you had to initial. And one of those is kind of a little bit of a, it's been coming up a little bit. And so one thing I want you to remember is as we go through this entire process today, this loan forgiveness, right? Because that application talked about this being a forgivable loan, right? And it's going to cover 8 weeks worth of your payroll and some of your expenses and some of that stuff. The important thing to remember is, number one, forgiveness is not automatic. Just because you qualified for the loan, it's not automatic. It was set up as a loan, and some of you were a little bit nervous about that at the beginning. It was set up as a loan through the SBA for a reason. The reason it is because you have to do something in order to get it forgiven, right? It's not automatic. If you don't do anything, it's a 2-year loan at 1% interest rate. You have to now do your part to basically apply for forgiveness. That has to happen. And one of the areas of concern, so I'm going to give you this page a couple of times, right? I forgot I tucked this one in here. I'm going to give you this link several times today. As part of what we've put together, I created this page after the last webinar that we did on the application process. So grandyassociates.com/untangle. We've got a bunch of resources. The first chunk of it talks about how to get that loan. And if you're still wondering, can I still apply? I haven't done that yet. There are still PPP funds available. Right? In fact, talking to my banker yesterday, my commercial lender, he approved the loan yesterday morning. All right, so there are absolutely still funds available at this point in time. If you've already got your loan and want to find out more information, just simply click on this link here. I've received my PPP funds. Now what? It'll take you right to the section. And a lot of the things that I'll be talking about here in the next 50 minutes are going to be on that page in terms of resources. Now, on that, this is one of those stickler points that's come up. Right, and it was that on the original PPP application, the second page, you had to initial all those certifications. And one of those items said the current economic uncertainty makes this loan request necessary to support ongoing operations of the applicant. You had to agree to that. Now, one of the questions that's come up regarding this is, did you really need the funds? Right. In fact, yesterday, what I had heard is somebody saying, well, they're going to go back and audit you. And if you had adequate liquid funds available, then you weren't going to get this forgiven. Well, the SBA has issued some clarification on this. And they're very specific as to what it was. Right. Because the question is, who defines uncertainty? Right? You can say it's uncertain, but if they don't say it, well, then what? Right? And so, so the clarification that came out last week is basically good faith certification of economic uncertainty. And it's basically, this is pretty much the exact verbiage. Right, so I hate slides with a lot of text on it here, graphics, but some of these I've got it just because I wanted to be very clear. And it basically said that SBA said any borrower that received PPP loans with an original principal amount of less than $2 million will be deemed to have made the required certification concerning the necessity of the loan request in good faith. So in other words, if your loan balance was less than $2 million, they're saying, okay, we got it. We understand it. You needed the funds. They're not going to audit a balance that's less than $2 million, right? And what they're saying, now, if it was more than $2 million, yes, then they're going to audit it. And their statement, when you go and look at the rest of the print, what they're basically saying is that they're figuring that if your request was less than $2 million, right? So for most of us, that was certainly the case. If that was the case, odds are you didn't have the liquid resources, the cash available to keep floating your company through for a long period of time. We were all impacted in some way, but you didn't have the resources to do that. You heard in the news companies like Shake Shack and some of those that requested and got $10 million and they didn't need the money. Right? Those are really the companies that they're looking at. So if your balance was over $2 million that you requested and received, then they will audit you and you need to be able to show that, yes, indeed, you needed these funds. So that's a clarification. Again, if you're less than $2 million, you're in good shape and you don't have to worry about that piece of the puzzle. So let's move forward from there. Then we get to the application for loan forgiveness. Now, there's a lot in here. The actual application was 11 pages long, right? Leave it to the government to come up with a application for forgiveness that's 11 pages long, that's dealing with a loan that only took 2 pages to get, right? And so that's a part of this issue. Now, again, I've spent days going through every word on this document, and here's the thing. There's really, out of 11 pages, there's only 4 pages really that you're dealing with. Pages 3, 4, 6, and 9. Incidentally, so as I start to get through some of this detail, we are recording the session today. We will post it out on the grandyassociates.com/untangle page. So if I cover some stuff too quickly, you will be able to go back and watch this again. Second point that I will make real quick is I had forgotten when we got started to introduce our producer. Stacy is manning the controls today. Say good morning, Stacy.
Hey, everybody.
All right, so Stacy is watching the chat window. She's watching the questions that are coming in. I will say that I have never had a program that I've done that has had more questions submitted. And so I've tried to build most of those questions in here. For many of you, if you ask the question, I tried to reply directly back to you, but then also built the answer into the program here today. We've also had several questions I know that came in before we even started this morning. So Stacey will probably be interrupting me a time or two to make sure I'm covering some of those. Please know that if she asks me or you ask a question, I may tell you to hang tight a little bit because I want to conserve our time as much as we can, and I know that I've already answered that question coming up. Right? But at the end, I will stick around and take as many questions as I can and answer those as we go through that. So with that, coming back here, there's really, out of the 11 pages in the application, and you can download this from our Untangle page, there's only 4 pages really that you're filling out. Pages 3, 4, 6, and 9. Those 4. Now, as I was going through this, what I found is that it's terribly confusing. Right? And so I'm going to cover this, and a lot of the questions that we're going to go through, I'm going to walk through the application process. And the reason I'm going to do that is because I can answer all these questions as you will encounter them as you're filling out this application. And so the easiest thing to do is really, out of all 11 pages, start at the back and work your way to the front. And the reason for that is because on the first couple of pages, it's asking you to fill in information that you actually completed on tables on the back. Right, so it will dramatically simplify your life, right? I've already dealt with that confusion. Start at the back and work your way forward. So the first thing we're going to get to is I'm going to start at the back, right? So in the back of the application, you're going to find a worksheet, worksheet A, tables 1 and 2. It's on page 9 in the application, and we're going to start moving forward. So this, again, it's still not terribly complex once you actually go through and kind of dig through it. So I'm going to break this down into three different sections and talk about these individual sections. So first one I'm going to deal with is the very top piece, right? So let's blow that up so we can actually see it. Table 1 is actually dealing with employees who make less than $100,000 per year. Right? That's the piece of the puzzle, right? So those people who are making less than $100,000 per year, you're going to list those individual employees on here. And again, the couple of requirements. Number one, they have to be employees that reside in the U.S. That's the first one, and their compensation was less than $100,000. So we've got that one. So as I walk through this, even this comes up with a couple of questions. So I'm going to list the individual employees. Who are they right now, right, that I've got on the team? Right? What's the employee identifier is the last four digits of their social security number. That's what they're going to put in for that. The next one is the cash compensation, right? So what were their wages? So this always brings up, and there were several questions that came in on this, is what is cash compensation? Right? So let's dig into that a little bit. The definition, what they're considering cash compensation for your team are their gross wages, their salary, that you're paying them, right? Whether it's hourly or salary, gross tips if they have that, commissions are going to go in here, paid leave, right? So if you've got, and I know there's a question or two that came out on this one regarding paid leave. Again, if it's standard family paid leave, that would be included in cash compensation. The only leave that's not covered is if you have employees that are basically being covered by the Family First Coronavirus Response Act, the FFCRA. That would not be included in cash compensation. And again, that program was basically in the phase one of the coronavirus stimulus packages, which basically, if you had somebody who had coronavirus or they had to stay home to take care of the kids because schools were closed or whatever the case is, right? And if they're being covered and compensated under the FFCRA program, that would not be covered under cash compensation. Any other paid leave would be covered. Next one is separation pay. So if you've got some employees, and this question came in as well, we had some separation pay. Right? We were firing them, we were getting rid of them, whatever the case is, and we basically negotiated a program, and so that separation pay would also be covered under cash compensation. Right? So that can all be included in that piece of the puzzle. So one of the other questions that came up a lot was, can I give bonuses to my employees? Or can I give a hazard pay, right? Or whatever it is, right? So first off, the answer to that question is yes. You absolutely can reward, right? So for some of you, you had employees that you asked to come back into work, and some came in and others said, no, I don't feel safe about it. I don't feel comfortable with it. We're staying home. Right? And if that's the case, right, or I'm not going to go out in the field and do work, right? I'll work in the office, but I'm not going to work in the field. Now, if that was you, right, again, you can absolutely reward those individuals who are doing the work, right? It's your choice. The only caveat is they can't earn more than $15,384 over the 8-week period. Right? Because that's that threshold for $100,000 per year. Now, the question also came up, can I call it, what do I call it, right? Can I call it hazard pay? So here's the thing, right? There's nothing wrong with calling it hazard pay, right? You can absolutely do that. The more I've dealt with this, I've kind of changed my position a little bit in that I wouldn't necessarily call it hazard pay because that might set a precedent within your company. If something else happens down the road, right? If we have a resurgence in fall and we're dealing with that, right? If we've called it hazard pay, then suddenly at that point, they might say, well, okay, where's my hazard pay, right? So you don't want to set a precedent. You might call it essential worker pay, right? Because things were shut down, but essential workers could come in, right? So that could do it, right? Or you just increase it. I know of some companies that literally just told their employees, look, you're in here, you're working over the next 4 payrolls, next 8 weeks, you're going to see a little bit of a bump in your pay. Right? And that could work as well, right? So do what you want, but again, just kind of be careful of setting precedents. You can absolutely pay your people more in the middle of this piece of the puzzle. So again, that's really what that cash compensation includes. I will say this, and I saw one of the questions come in earlier in that cash compensation was also that, it's going to ask you here in a little bit about taxes. Only state and local taxes can be claimed on here. Not FICA, not federal, not Medicare. Any of those other items cannot be included because you're already going to get a write-off on that on your taxes at the end of the year. They don't allow you to take that here. It's only The only taxes are local and state taxes that can be included on this piece of the puzzle. Next one is the average FTE. The FTE, full-time employees, is what it always looked like. It's really full-time equivalency. Or full-time equivalent employees is what this number is. So again, there's been a lot of mystery around this, and what is it? They've brought in a whole lot more validation to this piece of the puzzle as we start moving forward. So let's talk about that for a little bit. To calculate your full-time equivalency is what this is basically you're simply going to take anybody who is 40 hours a week or more is considered a full-time equivalent employee, right? So you're simply going to take how many hours they're working per week divided by 40, right? And the maximum is 1, right? So again, if they're working 40 hours or more, the full-time equivalency is 1. If I've got somebody who's working less than 40 hours a week, again, simply take what's their average hours that they're working per week, right? And again, look at it over the 8-week period here as we're moving forward. And in that period, you're going to go ahead. Let's say this guy's got 35 hours per week, right? Okay, so 35 divided by 40 is 0.9, right? It's 0.9 full-time equivalent employees is what you're dealing with there. So let's say this is employee number 1 is working 40 hours or more. This is employee number 2. At that point, you have 1.9 full-time equivalent employees on the team. Right, so that's the standard method of doing it. You're going to do that with each employee that you've got on your individual team. Again, remember, this is the group who is making less than $100,000 per year. Now, they did put in place a simplified method, right? So this is the standard way that you're going to calculate full-time employees, right? So for most of you, that's exactly what you'll do. They have a simplified method in here which simply states that any employees who are working 40 hours or more is 1, and anybody who is working less than 40 hours is 0.5. You can choose whether you use the standard method or the simplified method. It doesn't matter. Now, there are cases where the simplified method would be an advantage to you, right? So let's say before all this started, an employee was working 30 hours a week. And now they're only up to 10 hours per week. In that particular case, it would actually be to your advantage to use the simplified method because they're less than 40 hours, it's 0.5. Whether they're 30 or whether they're 10, it's still, the simplified method is 0.5. Now, you have to choose, I'm going to use one or the other, right? I can't use standard method for the majority of the employees and simplified for, this one person. Right? It's just for your entire team, you're going to use the simplified method or the standard method, but you can choose. So use the one that is to your advantage as a business owner. All right, so take some of that mystery out of that full-time equivalency. That's how they're calculating it. Right? So again, it's your choice which method you want to use. So I'm going to plug that one in, right? So for this employee, his average full-time equivalency is 1, right? Because he's working 40 hours or more. Next one is the last column here is the salary or hourly wage reduction. Remember, one of the caveats, one of the elements of this program stated that you can't reduce wages more than 25%. So let's dig into this one a little bit more, right? As we get into the worksheets, number 1, right, if you look at the print, the directions, you're going to complete this column only if you reduce their wages more than 25%. If you didn't reduce their wages more than 25%, you're going to put a 0 in there, right? In other words, there is no reduction. Now, you're basically looking at the covered period, right? In a little while, your covered period is your 8-week period. We're going to talk about that in a little bit. You're basically comparing the covered period to the period of January 1st through March 31st. And are their average wages the same as they were back at that point in time? If they are, you didn't reduce their wages, you're in good shape, right? Again, so that's the comparison that you're making. So again, it's looking at the annual salary, or if they're salary employees, or hourly rate. If their wages, again, were not reduced by more than 25%, you can just enter 0. You're in good shape there. If there's a question, then on the worksheets, right, and it's right in front of the tables here, you'll actually have this narrative here, which is basically stepping you through calculating, did I reduce their rate by more than 25%? Right? And so you'll see those, you'll walk through this piece of the puzzle. And again, the question is, if you didn't reduce their wages, it's zero. Right? If they're making the same amount today they were back at that point in time. And so we're going to go ahead and plug that in. But this simply just walks you through that same information as far as, what percentage did I include that? Did I put that in there? So again, that'll step you through that piece of the puzzle in the worksheet. So again, I come back in here, this guy's still working 40 hours. I didn't reduce it or cut his pay at all, so he's at zero. Right now, from that point, the next item, and this is a whole series of questions that came around this one, is if you notice this column right here, it's the full-time equivalent reduction exceptions. Right? And so when I look at that, what's an exception? Right, so number one, again, one of the elements, again, of the program was just you had to maintain headcount. So we needed to make sure that you had 10 people on the payroll before, you got 10 now. Now there are some of you that had situations that, well, look, we're down, but I had somebody quit, right? Or I had somebody, whatever the case was, I had to fire somebody, whatever the case was, right? Or the other case was you had laid them off and you called them to come back and they said, oh, I'm not coming back to work out there, right? I'm going to stay on unemployment. Here's the thing. They've clarified this. It basically says that you made a good faith written offer to rehire them and they chose not to, right? So in other words, they're on unemployment. And so all you need to do is give them that offer in writing that, hey, we're asking you to come back to work effective immediately, right? Or whatever the time frame is, right? At this particular wage, right? And they refused it. Right? If you have it in writing, you can't just say, well, I called them and offered it, right? Send it to them in an email and they need to approve or disallow it, right? And if they rejected it, you're in good shape. That's a valid exception. Employees that were fired for cause, right? So you had cause, under legal cases to dismiss them. They voluntarily resigned. I'm working with a company here in town that when this owner called our team back, one person said, you know what, in the meantime, I found a job elsewhere and I'm going to stay there. And so I'm not going to come back, right? So that's a voluntary resignation at that point. Or they requested in writing and you approved a reduction in hours. Right. So in other words, they were working full time before and now they're, for whatever reason, they don't want to work full time now. Again, as long as they request that, they send you an email or request it in writing and you approve it, that's a valid reduction in hours as well. So that's a valid exception. Now you get to this last one again, list only positions that were not filled by a new employee. In other words, Joe was working here before. We had to get rid of Joe. There was problems there. So Joe was released and we brought Ben in. Well, again, that position was refilled. Right? So we don't need to list both of those individuals. I only need to list one. Because here's the thing, right? That you're maintaining headcount. Now, the question comes in, well, yeah, but we had to list the individual people here. Again, once we get beyond this worksheet, that's just to help you keep track of it, is really all it is. Once we get beyond this worksheet, now we're purely looking at average full-time equivalency and cash compensation. That's it. Right? So again, in this particular case, I had one employee, which was a full-time equivalent reduction exception. Right? So I add that up, and then we come down here into the next one. We're going to tally up box 2. Right? So I got these two guys who are currently on the payroll. We had one exception that was there. So I have 3 at that point people, full-time equivalent people that were accounted for. Even though this third guy is no longer here, right, it does factor into my numbers. Now, so once we get to this point, you'll tally up these 3 columns, right? So cash compensation, in my case, $16,944. Average full-time equivalency is 3, and I had no reduction. I'm paying my guys the same thing we are today. So once we get to this point, literally, as we move forward here, it's simply going to ask you, go back to Table 1, Box 1, get me that information. Go back to Table 1, Box 2. Table 1, Box 3, right? That's what it's looking for at that point. So real quick, Stacy, I know you're probably looking at a whole bunch of things, right? Are there some questions that are there that that I didn't cover at this point?
Sure, let's try some of these. So employees who make over $100,000, does the loan forgive up to $15,000-ish, or are they disqualified?
Okay, so hang on to that one because the very next section is employees over 100,000. I will answer that.
All right. What if one employee was on unemployment the first week, but then you brought them back for the remaining time period?
Not a problem. You're in good shape. Again, your full-time equivalency at that point is still he's on the team. You just have to bring employees back by June 30th.
All right. We brought back our entire staff through the program. There's not enough work to keep them busy for 40 hours a week, but we are paying them 40 through the program.
Okay.
So can they all be noted as full-time employees?
Absolutely. Again, it's what you're paying them for is what's important here. So that's a great question, right? I've only got 25 hours a week worth of work, right? The whole goal here of this program was to keep the team paid. And so absolutely, they are considered full-time equivalent employees. You're paying them for 40 hours a week.
Does salary wage reduction cover employees with the same pay rate but reduced hours?
So they're receiving the same pay rate, but their hours are down? Yes, that would be a reduction. Because again, the idea was to pay them for, if they were working 40 hours a week before, we want to make sure they're getting paid for 40 hours a week now. And so the idea of the program is that I would, just like the last question, I don't have work for them, but I'm still going to pay them for 40 hours anyway. That was the idea of the program. So that would be a wage reduction at that point.
So we have an employee that is unable to work due to childcare issues, and he is currently receiving unemployment. So how is someone in this situation accounted for?
So they chose at that point, right? So again, they chose to stay on unemployment at that point. And so that being the case, that's a valid expense. You're covered there. That's a valid exception, right? So I would just offer, again, make sure you got that in writing, right? That we offered their position back. They chose not to come back because of that child care issue. You're in good shape.
Okay, so back to if one person quits, there are no call, no show, and we hire a new person in the same week for table 1, do we only list the replacement person?
Correct. You
Okay.
only list the replacement at that point. Your head count is still exactly the same.
What if you only hired a new person for a particular position and didn't offer it to a previous employee?
So in other words, I'm assuming there it means you increased your head count. Okay, so so I'm hoping I got that question right. If you increased your head count at that point, then again, you're in great shape. You can always grow, right? The question would be if you laid somebody off and then I offered this position to somebody new, right, and brought them in. Again, your head count is still the same, so you're covered at that point. You can still run your business under this program. That is not a problem.
And can you confirm that the owner employee's pay is eligible?
The owner employee's pay is absolutely eligible, without a question of a doubt. So, in fact, if it's less than $100,000, it goes on table 1. If it's more than $100,000, it goes on table 2, which I'll cover next. So, as the owner of the company, you are absolutely covered and eligible for that. You will see that when we get a little bit farther in. Okay, so I'm going to stop you at that point in time because we're still going to answer a few more of these questions. Again, at the Untangle page, one of the elements that's out there is there's a spreadsheet that my bank had provided to us that helps you with all of this stuff. There's a tab on there which specifically walks you through the process of list each of your employees, what are they making, right? It basically goes through, it's the compensation reduction calculator. Did you have that reduction? And it will tell you how much of a reduction, right, that individual that you have to claim. Right. So again, it walks through that piece of the puzzle, and so it helps tremendously in clarifying that piece. They've given us permission to share that. It's out on the Untangle page. You can download that one. So, and I'll refer to that one a few more times. So now let's go to, and we spent more time on that first table because a lot of new stuff coming at it. Table 2. Again, still worksheet A, table 2, still page 9, that very end of the document. This deals with people who are making more than $100,000 per year. Okay, so now here's the thing. PPP covered wages up to $100,000. If you prorate that out over, really over 52 weeks, that's a maximum of $15,384 throughout this 8-week period. right? So the program, if you've got anybody making, whether it's the owner or anybody else who is making more than 100,000 per year, again, you're simply, columns are pretty much the same, right? I'm going to list it, who's the employee, the last 4 digits of their social security number, what's their cash compensation, and again, remember the maximum amount allowed is $15,384. If you go over that, your banker, lending institution is going to kick that back at you because it's not a qualified expense. And then again, full-time equivalency, figure it out the exact same way we did on the rest of the team. Right, so again, that's how I'm going to handle anybody over 100,000, whether they're hourly or salary, doesn't matter. That's the way that we're going to figure them out, and they will be listed on table 2. Okay, you notice there is no section on here for the reductions because again, the cap is 15,384. By virtue of the fact that they're on table 2, said they're already at more than $100,000, so there is a reduction, and we're just giving them the maximum. All right, so that part is there. I did have a question or two that came in saying, as owners of the company, we didn't pay ourselves for a couple of weeks leading up to this thing before we got our funds. Can we catch up? Yes, you can. But remember, the maximum in that 8-week period is $15,384. So again, just don't get yourself, only that amount will be able to be covered as we go through that. So again, in here, we're going to go ahead and tally up what's my total cash compensation for this team. What are my total full-time equivalents employees that we have at this particular point? So that table is much easier since we've already identified or defined a lot of those areas. Again, once we tally them, remember there's box 4. So later on, it's going to say go back to worksheet A, table 2, box 4. There it is, right? And box 5 is listed right here. So that's the first 2 sections of that worksheet. Right now, the third item is this full-time equivalent reductions safe harbor. Again, so somebody asked me, what is safe harbor? Is that, well, safe harbor is basically if I had a reduced headcount for my team, is it approved or not? And so this last section here is literally that. Right? It's the full-time equivalent, safe harbor, and it's basically going to go through and you're going to fill this section out and it's showing you how many of those people are valid reductions. All right? And so it's simply walking you through that individual piece of the puzzle. Again, if you're using the spreadsheet has another tab on it. It's found that on the Untangle page. Another tab that walks you through literally the full-time equivalent calculator and are they valid reductions or not, and will you be penalized as a result of those? So again, it makes it much, much simpler as you're figuring that part of it out. So hopefully that one will help you. So then we get, okay, so worksheet 9 is done. Now we go to worksheet A itself. This is on page 6. All right, so we start at the back, we're moving our way forward. So page 6, first off, when I go into, again, you can see it's not real tough. There's not a boatload of information that they're requesting here. Let's break it down into a couple of sections. First off, the initial section, right, Schedule A, worksheet table 1 total. So literally, right, go back to, box 1 from worksheet A, table 1. Fill it in here. Box 2, worksheet A, table 1. Fill it in here. Box 3, right, fill it in here. Right, so you plug those in. That's it. You're just literally transferring information from the tables you've already filled out. Next section comes into the table 2 totals. So again, it's literally box 4, Schedule A, worksheet 2, right? Bring that one up. Box 5, bring that one up. And so that one's just transferring information. Those are pretty easy. Now we come up with the non-cash compensation payroll costs during the covered period. Okay, now, for this, again, so line 6, the total amount paid by you, the borrower, for employee contributions to the company paid health insurance. Remember, that's a health insurance plan, right? If you as the owner, we don't offer health insurance to our team, but basically the company is making my health insurance, that doesn't qualify. You have a qualified plan, right? That's in there. It's the company portion for that. Line 7. Is the monies that the company is putting into the employee retirement plan, so 401k or anything like that. It's just your portion is the company. It's not the employee's portion, just your portion, right? And then line 8 is the federal, state, and local taxes. Again, do not include the employee portion of the withholding, and don't include federal, FICA, Medicare. Any of those other things are not covered under the program. It's just the state and local taxes, so we'll fill that one in. So that one's not too tough. Go down a little bit farther, right? So we've got that. As we go down one more step, right? Line 9 is basically the total amount paid to the owner, employees, or self-employed individuals, right? So if you're not on the payroll, for many of you, you're not on the payroll, you're not working through it, so you're not going to be on the 941s and some of that. You take cash out of the company. At that point, so it comes right back to the question that you had asked earlier, is the owner's pay covered? Specifically, in this case, how much did you take out? Remember that the maximum is going to be that $15,384, and it's telling you that, again, this amount is not, it cannot be included on Schedule A Tables 1 or Table 2, right? So, again, if you're running yourself through payroll, then it would be on Tables 1 and 2. If you're not going through payroll, you're just pulling cash out, that's where you'll put it right here. And if you have more than one owner, right, they only give one line, you basically need to attach another sheet there showing the list and how much each individual was making. So we'll break that one out. Going down a little bit farther, right? So as we cover a little bit farther, the total payroll costs, right? So we tally that section up, right? It's just the boxes you filled out above that. And then we get down to the full-time equivalency reduction. And so again, if you use the spreadsheet, you can transfer some of the numbers from there, right? But when we go through and look at this, if you've not reduced the number of employees or the average paid hours of your employees, simply check the box and enter 1. Right? You go to a 1, and that's it. You're done, right? If you needed to, right? So otherwise, then you got to fill out lines, the last couple of lines, right? So, in here, what's the average full-time equivalency during the chosen reference period? In other words, when you applied, it said, okay, how many did you have last year? They're basically picking a new reference period here now, right? And so, because the concern is, well, I've grown since last year. Well, okay, they've given you one of 3 different ones, right? So what was your full-time equivalency from February 15th of 2019 through June 30th of 2019? I can use that as a reference period. I can use January 1st of this year through February 29th. I can use that. Or if you're a seasonal business, then I can pick any 12-week period between May 1st and September 15th. So as the owner, you can choose which reference period you want to have. So how many employees did you have during the reference period that you're going to choose? Next one is, what's the total number of employees? Add lines 1 and 2 above, right? So how many do you have today? And then third, right, basically divide line 12 by line 11, right? And you're going to enter in 1 if it's 1 or greater, right? So again, it's basically a multiplier, right? So if I have the same number of people, it's going to come out to 1, right? It's a multiplier that you're dealing with. So that's, hopefully we've kind of clarified that one a little bit. So Stace, any other questions that came in specifically there that you can pin down? All right, so at this point, there's questions there. One of the things we're going to do, because here is the thing, there are a boatload of questions coming through. We will go through these. I'll go through them individually, and I'll respond to each of these, and I'll put that document out on the Untangle page as well. So as soon as I can crunch through that and answer those. Again, so there's different comments and questions coming in. We'll kind of deal with those as we go through that. So then we come up to step 3, which is the forgiveness calculation form. And so this form basically, right, so we started at the back, we moved our way forward. We hit page 9, then page 6, now we're hitting page 3. All the rest of it is definitions and explanations. And so on this page here, we're going to start at the top, and there's a couple of different areas in there. So first off, you're going to fill in at the top your company information. There seems to be a little bit of confusion. So this DBA, right, if that name is different than your normal legal name, that's where I'll fill it in. Otherwise, leave it blank. You're going to fill in the rest of the information at the top. From there, it's the SBA PPP loan number. So when you got approved by your lending institution, the SBA issued a 12-digit SBA loan number. That's the number that I want right here. It's not the loan number from your loan document from the bank. The bank itself or the lender will have their own loan that they have. right? But the SBA, right, had a 12-digit number. Hopefully your lender gave that to you. If they don't, right, just give them a call, find out, hey, for my application, I need the 12-digit SBA loan number. They'll be able to provide that to you. The next one, what was the actual loan amount for your PPP funds? I'm going to fill that one in. And what was the loan disbursement date? What was the date that you received your money? Not the date you signed your documents, not the date that they approved it, the day that you got your money. That's the start of your covered period. Okay, so in this case, I've got April 20th of 2020. How many employees did I have at the time of application? And how many employees at the time of forgiveness, right? So I had 10 employees, kept them all on board. We got all the way through. Did I get an EIDL loan, right? That was that economic injury disaster loan. That was the one that had the $10,000 grant to it. If you received that $10,000 grant, and there haven't been a whole lot of them, right? It was supposed to be, you'd have that portion of it within 3 days. That didn't materialize. If you got that $10,000 grant, they're going to take that off the forgiven amount of this loan, right? So they're not going to let you double dip on that one. So if you got the $10,000, you'll put that one in. And then what was your EIDL application number? Because those loans in most cases have not been formalized at this point. Next one. How do I pay my team? Is it biweekly? Is it monthly? Bi-monthly? Right? I had a number of calls on that one as we went through it, so we'll cover that one. Next item is so the covered period is literally the start of your covered period is the day that you received your funds. And then the next 8 weeks, right, or 56 days from that period. So I got these funds on April 20th. The end of my 56-day period is June 14th at that point. That's the period of time that I'm looking for. Now, for some of you, your payroll doesn't hit in those places. Right? My payroll didn't hit on April 20th. So what do I do there for payroll? They give you the ability, this last item is the alternative payroll covered period. Right, so what you can do, you don't have to use that. You can just stick with your covered period, and that's fine. But otherwise, you can choose. So let's say this period, right, the payroll didn't hit, right? So basically what it's saying is that, and I just want to see real quick, you can choose either for this alternative period, again, just stick with your 8 weeks, then you don't have to fill anything in. Or let's say, I receive my funds on Thursday, but my next payroll period doesn't start until Sunday. Right? You can choose an alternative period starting that Sunday. Right? So that way, again, it's basically going to be within 2 weeks if you're paying biweekly, right? Within 2 weeks of your disbursement date would be the start of your alternate period. And that way, then I can follow my 8 weeks there. It makes tracking that payroll much easier at that point because now, again, let me back up there a step. Right now, this period will exactly match my payroll periods. Now, so there are a lot of questions. So again, you can choose whichever one of those, whether it's a standard 8 weeks for your covered period, or you can choose the alternative period, whichever one benefits you the most. It's your choice. All right, so you can look at both of those. Next section on that application is the chunk on the bottom half. So again, if we break this down a little bit, right, number one, the payroll costs, what was the, again, simply, right, Schedule A, line 10, right, we're going to bring that one in. We also we're pulling stuff off of Schedule A, line 3, Schedule A, line 13, right, so those chunks are fairly easy to come. We're just bringing that information forward. The next one, line 2, the business mortgage interest payments. So, interestingly, this has received some clarification, right? Let me back up. So this has received a little bit of clarification. And again, I told you that I was, going through some of this mind-numbing documentation that we've had, right? Literally, there was so this is page 21,749 of the Federal Register, volume 85, number 76. Right, states specifically, initially the application said business mortgage interest payments. They have clarified that on April 20th, and it states at this point, mortgage interest payments, not prepayments, so you can't prepay, and it's the interest only, not the principal, right, on any business mortgage application for real or personal property. So clarify that. That means basically interest on the mortgage for your building, your equipment, or interest on an auto loan for a vehicle that you use to perform your business. So that means that if you bought a truck, that interest on that truck loan would be covered, right? And again, that's coming, and I've got literally, because I've got this page on the Untangled page, because that's one area that came up of a lot of confusion. The next one is business lease payments, right? So business rent or lease payments. So initially it was just business rent. They've added lease payments to the application. And this is really anything, you just have to be able to show that this contract was in place as of February 15th of this year, right? So your lease was in place, Now this does, and the area of question comes in, is lease payments. That basically, the interpretation is generally any lease payments you have. So if you're leasing a copier, if you're leasing a truck, if you're leasing equipment, that lease payment would be covered. Now, again, that's one that will need more clarification because they haven't really specifically identified that one, but that tends to be, from everybody I'm talking to, the general concern or the general consensus. So again, just needs to be under contract, right? And so, again, lease payments for any property that's used by the business. Next one is the business utility payments. Good Lord, if there was one item that got any more questions, it was this section. And quite frankly, most of it came down to one word, right? So what it states, again, hate, a lot of type, right? But this is that same register, right, the federal agreement, right, from April 20th. And I put it on here purely because again, it's word for word, right? And this, you can get this same documentation. So there's the interest, mortgage interest stuff that we talked about. And then in the same paragraph, it talks about business rent payments, we got that, and it's giving the example, right? A warehouse where you store your business equipment or the vehicle you use to perform your business, right? So that's where that lease payment comes in. The truck leases are very, very clear there. Next one, right? Business utility payments. Example, the cost of electricity in the warehouse that you rent or the gas that you use driving your business vehicle. Okay, and so keep that one in mind. Again, here's where this is interesting, right? Is that, again, so we talked about the interest, right? On any other debts is not covered. Okay, we got to go back here. So here's where this is really interesting is, again, the original application said utilities would include basically electricity, gas, water, telephone. They've revised that and they've added in really two items. Number one, internet is absolutely in there. Second item is that in addition to internet, telephone doesn't designate between landline and cell phone. So both of those are understood to be qualified expenses. And then the third item is transportation. What is transportation, right? So that one always comes up. And so I asked, for example, my CPA, I said, how are you guys interpreting transportation? And they said, well, we consider that gas in the trucks. And then I went back and talked to my commercial lender, and he told me, no, that's basically gas transportation required to get your other utilities to you. And I'm going, well, that makes no sense to me because as a company owner, I don't pay for gas in the truck, or not directly, to get my electricity to me or fuel, right? And so that's where I started to do a little bit more digging. And so again, even there's not a solid consensus, and it's going to be your commercial lender that's going to validate these expenses. So I found this document. This is the clarification from the SBA that specifically states gas in your trucks would be covered. All right. So now the question did come out, what about maintenance on the trucks? Again, I would make the argument that it's covered, but you got to talk to your lender on that one because, I'm not going to run the truck without maintaining it at the same time. It's not stated here, and they were very specific about fuel. So hopefully that one clarifies that. You can download that page with that highlighted section from that Untangle page. Next item. So again, interest is not covered. So then we come back in the application itself, and we're talking about that full-time equivalency once again. So again, This one, a lot of information coming from other places, right? So go back and get Schedule A line 3. We're going to fill that in. Add the amounts from lines 1, 2, 3, and 4, and subtract the amount that you've got in line 5. In other words, what are those non-payroll expenses, right? And then what you're looking at here, line 3, was the reduction, the pay reduction penalty that you're going to get, right? So we're going to subtract that out of it. Next item there is go back and get your full-time equivalent quotient, right? So Schedule A, line 13, you're going to bring that one over. That's, how many, what was that multiplier that you had? And then this next section, potential forgiveness amounts. They basically have now gone to 3 different qualifiers for that forgiveness amount. So line 8 basically says, what's your modified total? Multiply line 6 and 7 together. That's the first one. Line 9 says, what was your full PPP loan amount? And line 10 is basically taking your total payroll cost 75% requirement. That was one of the things that we take line 1 and divide by 0.75. And basically what they do then is you take the lesser of those 3 lines. Okay, so again, the maximum amount is going to be the loan total, right? But if you start looking at some of the other items, you're going to figure all 3 of them, take the lesser of the 3, that's the amount that would be forgiven. So a lot of stuff there that we covered. There were a couple of other questions. Let's see if we covered some of these. So do I have to rehire the same employees, or is it just headcount? We talked about that when it's just headcount that we're looking at there. And again, remember that in this entire section, that spreadsheet that I've referred to a couple of times, again, not only is it the compensation and the full-time equivalency sheets that you have on there, there's also a sheet on here which will help you calculate, this is basically the application itself, calculate what your forgiveness amount will be. So again, makes that process much easier. They've given us permission to share that one. I would absolutely utilize that. Some of the other questions, just in general, right? When should I apply for forgiveness? Well, number one, you're going to have to wait until after your 8-week period is up. Today, if you even talk to your banker, they're going to tell you you can't apply yet because there's really no funds that are, we haven't fully, number one, gotten through the 8-week period for most companies. Second is when should, you got to have all your documentation. And in a lot of cases, the lenders are still looking for verification or confirmation on some of these questionable items yet. So again, you're going to talk to them, but you have to at least wait until your 8-week period is up. The other question, I ran payroll the day before the funds were deposited. Can I include that in my payroll amount? The answer to that is no. It's for the 8-week period or the 8 weeks, your alternate payroll period is basically starting with the first payroll day, the day your payroll starts after you've received your funds. That was there. I had one other question that came in regarding payroll that talked about, okay, if I'm paying bi-monthly, twice a month, and payroll hit the day I received the funds, right? And then I went through and basically, then I got my next couple. Theoretically, I could actually get 10 weeks worth of payroll out of there versus 8, depending on when my payrolls hit, right? So it's very few companies, but there were a number of questions around that paying twice a month. Would that be covered? Well, again, as I read it, yes, it would, but remember that your PPP funds were based on 10 weeks worth of payroll. And so if you're actually going to use all of that for payroll, there really isn't going to be any money left over to cover the non-payroll expenses, right? So you're still limited to that amount of total pay that's there. If our lease is, for our building, I'm assuming this is paid through July, can I pay the monthly lease using PPP funds for the 2 months that are covered in this 56-day period for future months? Yes, as long as you're paying your, again, they're not looking at how much you're paid. It's just you're paying the rent for this month and next month. Those are qualified expenses. So that would absolutely be approved in that particular case. So Stacy, we're right at the top of the hour here at this point. So first, any bold questions that are coming out, we'll sit by and answer any general questions a little bit in just a minute. but are there any very specific ones on the stuff we've covered so far? All right, so they're a little bit more general, right? So again, she's got all kinds of comments and stuff there. So, and she's been sitting here typing fast and furious the whole hour I've been talking now. So again, remember that, that page, that a lot of the resources that we talked about, grandyassociates.com/untangle, or for that matter, any page on our website, you'll see this orange bar at the top. That will take you right to this page. And again, if you've already got your funds, click on this link right here. I've received my PPP funds. Now what? Right? And that will take you out to right to the section that we're talking about some of these items. And so when I look at just a couple of these, again, I'll just jump out there real quick. Right? So when I jump out to this page, again, I'm going to see that same link that's there at the bottom. Right, and it will take me at that point right to this section, right? So again, I've got a number of resources. We've given you the link for the actual 11-page application there itself. We've got a spreadsheet that we use out there to just help you track your expenses and try and project, right? Because one of the things you want to do is, if I'm going to increase pay for some of my people, how much can I increase it to maximize the funds that I received? And so again, as you start putting in what's your rent, what's your utilities going to be, right? You can now start to really back into some of the other funds that are there. That loan forgiveness calculator that I've been referring to all the way through here, that one is in there as well. We've given you some other documentation, some of the key points that you can run through. And then for some of you, okay, I just need a little bit more. So we've got, again, I referred to, Patrick had done a program on leading through and beyond COVID-19 process, right? So we've got that program that's out there. It's a very reasonably priced program. And for some of you, you really need to know what your numbers are. So one of the things that we can do as a company to help you there is we've been offering our 2-day Planning for Profit workshop, a modified version of it, online. And so at that point, we've got one more coming up. Right, and the big thing is we're offering it at 50% off of our normal price. Just that's part of what we can do to help you as you go through this thing. There are only a few seats left in this one. So if you're interested, you may want to jump out there now, right? Because after this workshop, we're going back to regular pricing. We've already done it twice now. After this one, we go back to regular pricing. And so this will be an online version of it coming up on June 9th and 10th. And again, we've got the ability for you to register in there for that program as well. So with that, that brings the end of the material that I've got to a close here. One of the things, so we're about 4 minutes after the hour here. Again, we did record this. We're going to post it on this Untangle page here. It'll take me several hours to get it out there, but because again, it's got to be rendered and that stuff. But once it's out there, we'll go ahead and get it posted for you. We'll also send you a link to it. Right, so after the program is, and we got it ready to go, we'll send you an email letting you know that it's there. So at this point, what I'd like to do is so if you're good, feel free to step out. Stacy, let's just run through some of the questions that we've got coming in, and we'll just kind of take them here. I'll sit here as we'll answer a chunk of these, and then we'll move on and bring it to a close. So just throw some of them at me, Stacy, that you're getting.
All right. Is 75% of the loan the maximum forgiveness amount?
Oh, is 75% the forgiveness the maximum? No. 100% is the maximum. All the 75% is we're saying that 75% of the funds that you're using have to be used for payroll expenses. The remaining 25% can be used for the rent, utilities, everything else. So, and that's where that planning spreadsheet will help you. Because again, how can I maximize once I pay my, the rent and the mortgage interest and some of those utility expenses, then quite frankly, everything else can go toward payroll, right? So that just helps you make sure that you stay in that 75-25% mix. At least 75% of your total funds that you receive have to go to payroll. Now, for some of you, you got more funds than you need. At the end of it, okay, I don't need this extra money. You can just turn around and pay it back. Right? There's no penalty on that whatsoever. So that's absolutely doable. But again, if you want to pay your people a little bit extra money, that would be the way to do it. Right? Just make sure that at least 75% of your total funds went toward payroll.
How about insurance on the trucks?
Insurance on the trucks is not covered. Right, so yes, I agree that we talk about utilities being the expense that we have. Yeah, that is an expense to keep that truck rolling. That is not a covered expense under this program.
And payroll taxes?
So payroll taxes, again, our payroll tax is a valid expense. Only the state and local portion of your payroll taxes, the company portion, is covered. The federal, the FICA, the Medicare, that stuff is not approved under this program. Just the state and local portion is.
Do you need to open a separate account to deposit?
Do you need a separate account to deposit this? Well, so that depends on your lending institution, right? So some lending institutions have said, yes, you need to have a separate account and put the money into that. Other companies, and the bank that I deal with said, it was our choice. We could do whatever we wanted. Now, my recommendation for you is to put it in a separate account. It keeps it clean. So literally every time we write out a check for a qualified expense, you don't have to draw the funds off of that account. Right? So for example, in our company, all of our checks come off of our main account. Every time Paul writes a check for a qualified expense, he will then go over, transfer the funds from the PPP account over to our standard account to make up those dollars that are there. And we're being very intentional about this. We're not lumping together any expenses, right? And so in other words, we process payroll, we transfer that dollar amount over. It's very clear what those monies were used for. If we pay the utility bill, right, for the gas and electricity, right, we transfer that as a separate transfer over. So we can now track very clearly what those transfers were used for. And I know of one actual lending institution, I talked to a contractor this morning who their banker did not actually give them the funds. In their case, what they need to do is we're processing payroll. Here's our payroll information. They literally transferred that dollar amount into their account. Now, the plus side to that, it's more paperwork as we go through it, but the bank is basically validating every single expense as they go through the 8-week period. So that validation will all be done for them when they get to the end. So you don't have to. I recommend it.
If I paid my April utility bills prior to receiving the loan, can I go back and use the funds for them? There are several questions in related to when you receive the funds, can you use anything prior?
Again, the qualified expenses are for the 8-week period. So again, the explanation that I've received is you have to have incurred the expense in that 8-week period. That being the case, if you prepaid, that portion of it will not qualify. Right. So at that point, what's your what's your utility payment for this month and next month, right? And and even if you're okay, the one that you're paying is a prepayment for the following, right? You can count that one in there, right? It's because you have to show, as part of the validation, you have to show canceled checks. And if you're generating a canceled check, right, when that payment hit your account was prior to your covered period, the bank is going to disallow that. So the expenses have to be in that 8-week period.
You're not prorating it.
They are not prorating it.
And what is the deadline for applying for forgiveness?
What is the deadline for applying for forgiveness? The actual application itself, right? And that's an interesting question. I have not had that one. So the application itself that came out on Friday has an expiration date of October 31st. So right now that would be the current, right, this document expires in October. Again, that very well may change. There are still funds available today. Again, just keep in mind that once you receive your funds, there's a 6-month deferment for payments. And so if you go over the 6 months, then you have to start making payments at 1% interest on that point. So, but right now, that seems to be the expiration.
If I use over 75% of my loan for payroll costs, say 90%, is that whole amount forgivable?
Absolutely, right? The only guideline is, again, those two elements. Number one, it can't be less than 75%. It can be more, right? So for some, yeah, we're increasing that dollar amount as we go through that. And as we increase it, now there's not enough left to cover all my utilities and the other stuff, or those expenses are fairly low, right? And if they're fairly low, can we increase it? Yeah, that's not a problem. Now, if you've got a case where those funds that you received for whatever reason are very high, right? Remember that the caveat is no one employee during this 8-week period can earn more than $15,384 because that puts them over that $100,000 threshold and it's not going to be covered. So you can't say, okay, I got an extra 20 grand left over in funds, I'm just going to burn it up and take it for myself, right? That won't be allowed. That's not a qualified expense. Now, could you pay bonuses to your team? Sure, you could do that.
We have some new employees that are subcontractors to help cover the work. Does it go into the payroll, and so they do pay through payroll in the subcontractor side of the ADP?
Okay, so if I understand that you're using ADP for your payroll and they have a subcontractor section in there. If they are a subcontractor, the PPP program covers subcontractors and independent contractors. They are a company of their own. And as a result, if they're a company of their own, they can go out and apply for PPP funds themselves. As a result, you cannot, the monies that you pay to a subcontractor or an independent contractor do not qualify as a valid expense, right? If they want the monies, they have to go apply for the PPP loan themselves, right? Your expenses for them will not qualify.
And how about required contractors' liability insurance?
The liability insurance is not a covered expense.
How do you factor in the employee bonuses or essential worker pay?
So how do you factor in that essential worker pay? Quite honestly, again, when you're looking at it, what was their pay, right? So going all the way back to worksheets number 1 and 2, what was the pay for their 8-week period that you gave them? Just include the bonus into that dollar amount. It's part of their total pay, right? You're not really talking about what is their hourly rate per hour. You're looking at and filling in the forms. What was the total pay for that individual over the 8-week period? And so at that point, if you gave them a bonus, you just add it into that dollar amount.
What happens if your payroll is biweekly but is an off week? So for example, my payroll was April 20th to May 3rd. I received our funds on April 23rd.
Okay, so again, that would be a prime case where you could either track the actual expenses, because it's actually the way the wording is expenses incurred or expenses payroll, not expenses, payroll incurred or payroll paid during the period, which means if I work a day, that payroll expense was now incurred, right? It wasn't paid out until payroll day. So that being the case, again, you have the choice. You can either track the incurred payroll for your 56-day covered period, or I can go back and declare a alternate period, which is going to shift it. But now, so that'll put me beyond my covered period, and that's why they give you the alternative, right? But you have to, it's purely for the 56 days. If you're paying bi-weekly, twice a month, then at that point, odds are you're covering more than 56 days. You have to limit it down to just the 56 days that we have in either, whichever those are, your covered period or the other side. Now, if your actual payroll is getting longer than that, right? So maybe you cover 60 days instead of 56 in your incurred expenses. Again, dollar amounts are okay. But again, remember, you're limited to basically only the funds that you received. And if too much of it goes on payroll, then you might not have enough to cover the individual utilities and non-payroll expenses, and that's okay. I mean, you can, if you choose as a company to apply all of these expenses to payroll. That's your choice.
Can we report workman's comp?
Workman's comp is not included as one of the valid expenses.
If we have techs that travel, are their hotel and food costs covered? Does the company need to pay for it, or can we give them a per diem per day?
So if the company is paying for it, it is not covered. Boy, that's a new one. Because in general, no, the hotel costs and that would not be covered. I'm going to say on that one, I'm going to say no, but I would recommend that you check with your commercial lender on that particular question. They're going to be the ones who ultimately have to cover it, and I would almost be willing to put money on it. They're going to say no.
How about holiday pay? Is that eligible?
Payroll is payroll. All right, so holiday pay is covered, time off is covered, vacation is covered. All those things are absolutely covered. in here. The only portion that was not covered for payroll expenses outside of the federal, those matching taxes was leave under the FFCRA program.
Are garbage services part of utility payments?
Are garbage services covered by utility payments? That question had come up. We've talked about it. Again, from everything that I am finding, that is not an approved expense. I understand some cover call it utilities, but from what I'm seeing, it is not a covered expense. And everybody I've talked to has said the same thing.
Insurance to vehicles, did you cover that?
Insurance on vehicles, again, the question did come up. Insurance on vehicles is not a covered expense under here as well.
Our employee contributions to employee retirement plans is made at year end to all employees still under our employment. Does our match qualify since it's not made during the 8-week period?
The expense has to take place during, to my knowledge, it has to take place during that period. So if you're not paying it till the end of the year, that might not, at that point, my understanding is that it will not be covered. Again, you may want to check with your lender on that one, but my understanding is that would not be covered because it's not in that 8-week period. Now, the only place that I would, and here's where I would specifically cover it, talk a question on that one, because that question has not come up, is again, by definition, the way that the document talks about payroll, and if I can find that, page 2 specifically does talk about payroll costs are considered paid on the day the checks are distributed. Payroll costs are considered incurred on the day the employee's pay was earned. So from that standpoint, quite frankly, if I was in your position, I would stand on that statement right there. I'm incurring the expenses because we have a matching a matching 401k contribution. It's just incurred now. We're not paying it until the end of the year. But they're going to be the ones who ultimately are going to approve or disapprove that expense.
Can I check biweekly and monthly for different employees?
No, because technically I believe they're all supposed to be the same. So it's going to be one or the other.
So I'm not sure which table he's referring to, but he says when we're coming up with the numbers to fill in the table, is there a specific date period that we need to be using? Yes,
one of those, I talked about the qualification period. So one was using the period from last year. I think it was March 1st through June 30th, I think, if I remember correctly. Or I could use January through March of this year, or if you were seasonal, you pick a 12-week period in there. So again, it's very clear in the explanation what those 3 periods were. You're basically going to pick one of those 3. Whichever one, quite frankly, benefits you the most is what I would take. It's your choice.
What about owner dividends? Should they be listed under Table 1 on page 9?
Owner dividends. Again, the question would be, if you're taking dividends, odds are, again, the question is, are you going over $100,000 in total? No, back up a little bit. Dividends are not payroll. It's got to be handled through payroll or monies that you're taking out of the company. And so at that point, I would not list yourself in Table 1 or Table 2, but on Worksheet A, where it's asking, I think it was question 10, it was asking about the employee's wages, right? So, and I would list yourself there, and you can include the dividends at that point. Because again, that's not, if you're in Table 1 and Table 2, that's going to be an issue because you need to be able to back that stuff up with 941s and payroll reports. So I would list that one. Actually, it was line 9, compensation to owners. Is what should go in there. But remember, you can't exceed $15,384 per owner in that case. So 1 or 2 more, and then we're going to wrap it up.
What if an employee stayed home and did not collect a paycheck because they did not feel safe?
Okay, so what if an employee stayed home, did not collect a paycheck because they didn't feel safe? So that would be one of those areas. If you would have to, at that point, again, send them an email, get that in writing that, hey, I don't feel safe, don't want to come in. That, at that point, would be a qualified exclusion. And so that would not be a problem. You wouldn't be penalized for that because they chose not to come in at that point. But you need to have that in writing to be able to support that.
And so that would be the same if a person is not working due to a non-work related injury.
Oh, absolutely. So if it was a non-work related, they're choosing not to come in at that point, just get that in writing. Because as an employer, you have the option, put them on light duty, put them on desk duty, something like that, and still be able to pay them. So that could certainly qualify at that point, and then you could pay them, right? So if they're choosing not to, that would be on them.
A combination base pay plus sales commission. So sales are down. Does the difference in sales need to be made up with the PPP dollars?
So that's a good question, right? So I'm partially commission based, and so since the sales aren't there, the commissions aren't there. That's your choice. First off, in terms of how you want to compensate them at that point, and so I would take a look at that again. If the compensation is down dramatically for individuals, if they're making less than $100,000, that could ultimately penalize you. Because part of that is when you submitted for your loan, you used the average payroll for 2019 when sales were higher. And so now if you're choosing not to pay them simply because of that, then at that point they're being penalized. And so yes, that can work against you. And at that point, we're sitting here at a little bit more than 20 after the hour. We're going to draw this to a close. At this point, again, we will post the recording. Once we get that, we'll send that out to all of you. And so you have that. Refer back to this Untangle page because, again, I'm going to post a lot of that information out there. And we have that available for you. And I keep posting updates to that page as we get more information or more clarification. So by all means, refer back to that page. With that, it's our prayer that you, your family, your companies are safe, that you're healthy. Be looking at what you're doing because this will impact your company going forward. How are you communicating with your customers? How are you letting them know what you're doing to keep them safe? That's a bigger deal than you think it is in a lot of cases. So pay attention to that piece of the puzzle. With that, God bless. Take care.